All right, post-game review. So let's see if we can find one that looks neat that we could look at. That's like understandable. I mean, I think this is the best one. We'll just kind of take out the swing high and low pivots. And we could, just for sakes, just kind of delete that and we'll bring it back. This one is, I don't know what this one is. I think maybe like a daily support or something. I don't know what this is. I think that sounds about right. No, weekly. Yeah, it's a daily. It's a weekly support. So we totally blew through that because it's gotten tested so many times. All right. So recap is that we shorted here and we took profit here at the last week low, and we had two trailing. I think they were entered in right here or something, and then basically the fib. Put the fib back on. If there it is. We'll go ahead and label this weekly support. So because that's torn up, it's probably resistance right now. But I think we could still go all the way up here. I think there's a fair value gap here that might want to get filled. It might want to try and go up and test for this this high. So I think this fair value gap is a big magnet that people are going to want to go after. And then this is the swing high, where we're expecting it possibly filling or getting rejected around here. It's either going to get rejected around here, right around the 0.382, or it's going to fill and then it's going to come down. And it kind of makes sense. I'm not 100% sure on that, just because next week is the CPI or the Fed funds, so the rate hike. There it is, rate hike. So, yeah. So that's basically it. As far as the trade plan for tomorrow, possible upside. I don't know if I want to chase it. It just feels really weird, and I don't know. I would rather short when it's up here than buy. It just seems like the risk to reward. I know I made a whole bunch. I mean, I'm halfway through my evaluation. So I had 6 accounts. 2 of them are still alive. I'm going to bring the other 4 back alive tomorrow. But, I've been trying to short the market, and finally it's here, and I was able to totally capitalize on today. Yesterday was really weird. The slow burn right here on this candle was just really difficult. Next time it goes that slow, I'm going to have a wider stop. I just felt really scared and wanted my stop just to be pulled to break even as fast as possible. But sometimes when it's like a slow bleed like that, you kind of have to have a wider stop and less risk. And that's something I did not see. I just did not see that going in, and now I kind of wish I did. I'm going to, I guess going forward, if I open up my journal, I'm going to put kind of like a slow bleed setting. So journal. Okay. Things I want to learn. So slow bleed settings. Setup. I need like around 20 ticks stop loss. So wider stop. My default's 15, and then like almost double or triple um, the break even. So if the break even is, I think it's 15 or 10. Let's take a look. So I want to see what the stop strategy 2 break even is. I think it's 10 for auto break even. It sounds about right. So we can put it to 20. This is the first one, and that one was really slim pickings. So let me make sure that that's, it's still the same good. So we're gonna go with double 20 tick stop loss, 20 ticks trailing auto break even, and half a percent. Because like next time, like I could have capitalized on it, and it just I wanted to do 1%, and that 1% with the 10 tick stop loss, or the 15 tick, I think it's 15 tick stop loss that I have. Let's see, 15 tick stop loss. So the current set up 15 tick stop loss, and then it was for the scalp 2 30 tick take profit, so 2 to 1 basically. So next time I'm gonna make it so that the stop loss is a little wider, and 20 ticks auto break even, and entry with a 1% risk, so 0.5. I should just call it 0.5 risk, and then we will do on the pullback, turn on entry bot on the pullback of a 3-minute trail. There we go. That would give the best odds for an entry, and for a higher stop, and a slower auto break even, to give the best chances for a slow bleed situation, because that killed me. Like, I'm not gonna lie, I was up 800 on the day in the very beginning, and then all that disappeared. I was at break even, I was at zero, but that I didn't have to lose that, and I just kept on trading for the rest of the day. And one of the ways that you can increase your risk is by trading more, and that's not what I needed, because basically the end result was I was up 800 on the day, and then I was at zero on the day, and that's good. I didn't lose anything, but still, I didn't want to lose anything to begin with. I was in profit. So it's drawdown control, especially in these evaluations. So evaluation, I'm halfway there. Take only like really good setups, and the goal is just to do open range breakout strategy. It's the ORB, open range breakout strategy. It's basically the first 15 bars, or the first 30 bars or something, of the New York session, and you can see on the Eastern Standard Time when the New York session starts, and there's the 2 open range breakout, which is London and New York. But yeah, so this is the pullback. It's that 3-minute trail, and I'll show you on that slow bleed. So here's the slow bleed right here, and sometimes it broke through the trail, and it was just a big headache because I couldn't really catch everything. Like if I had a stop right above here, it totally took it out. So I have to figure out a way. Maybe it's just doing supply and demand, and then waiting for the swing high and swing low. Let's see if I can get that indicator. Which one do I use? Do I use that one? No, I don't use that one. So let's take away that one. Let's take away that one. It's that one. I mean, I could use this one. I just like the dots better. I don't have those labels on there. Let's save that so it doesn't pop up again. All right, so these swing high pivots would come in handy for waiting until it's been purged and then wait for it to get trapped and then do it. As we could see here, we hit 2, 1, 2, and then we hit another one here. So three good entries on that slow bleed. I think, yep, this is still the slow bleed because it was bled all the way to here. Or, you know what, all the way to here. I take that back. So this was a good entry after it stopped this out at this swing high or swing low. And then again, right here on the retracement up. Some of these, you just wonder, if you're really using your brain. But this one got double stopped out. But if I had that 20 stop loss with a, what is that? 20 auto break even, that would have triggered the break even here. And then I think it would have still survived barely. I don't think so. But I would have had a chance to get back in. That would have been the big deal. It's, okay, like I could get back in. I mean, it triggered the arrows. So that would have been 4 or 5 good entries if I just knew about if I just did the swing low, swing high strategy, purge, and then go. But now I know, and I'm not so sure if I can do that with this 1 hour deal, just because I don't think it. I don't want that to change the width. I don't see it ever punching super high to where I need the swing high, swing low. I think it's more for another time frame. Let's see. Maybe I would need it for the H12. Let's try it. OTS. Okay, it's on. So we're gonna move this out of the way really quick. I mean, I'm not even in any trades anymore, so I'm not gonna get penalized for having a trade in. So there are times where it does peak above and it's concerning. So we're gonna do the swing high, swing low in here. And it looks like we don't even get one for this one. So we would have to change what the time frame is. I mean, we do get one for here. No, this one. So that one works. This one works. I think it would have to be something a little faster. This one makes sense. The H8. And then here we go. We got the purge of the swing. Right here. I don't know. It still doesn't make sense in some ways. On the signals, I mean, here it makes sense. And then here, for the most part, makes sense. Maybe daily. I mean, it gets a here. it gets it. We could use the moving average channel, and we could use that signal there too. We get it here. We use the moving average channel. So this one, instead of the arrows kind of guiding us, we would have to use the moving average channel as the guide. Like here, we assume it's there. This one is right there, and it goes down. It would be kind of tragic if this does not pull up. But I think this is it. Let me double check a little bit more on the back side. So for here, this worked out. It went under the swing low, and then it also gave the signal. And then here, hit the swing low, and then went up. And then, but it didn't get it here. This one was crazy. Like swing low here, but yeah, the trail's just a little laggy. Maybe this would be better on like an H4, maybe. I mean, the signals aren't really registering. Here we really got the signals registering. And this makes more sense. Like, okay, we would take this signal, or this, we come under the swing low again. Okay, we could take that signal. So maybe I do stick with the H12. It's just a matter of formality a little bit, where I just kind of have to watch. Like, let's go to the H12 all the way back here. No real, maybe there's a swing low here. Okay. Yeah, I have no idea. It's a little weird. There's obviously no swing low here. It would have been nice. But this was the first real buy signal right there. And then you start to get more swing lows here. We got a nice swing low here. Reclaim, still green trend. Hey, maybe this is the one. It was just the one we started with. But it's weird, like, we don't really have... Okay, here's a swing high. We took that out, got some negative signals. I mean, we got faked out a little bit here, but eventually came down. And then this one was false right there. And then this worked out well. As soon as we turned green, we came close. I mean, technically, we could just use the H12 support. You would technically use the down candle, but I don't know. I think we can make some exceptions. Like, we just want the swing low to get hit in some way, and then reclaim where we're above the moving average channel, and we have a green bias. Like, I think it makes sense. I think it's a good fit. Let's see the top of the market right here. I mean, it made sense here. Like, swing high, taken out, and this one even got a good entry here. If we did even the highest one, the bias changed. So let's check this. So no bias change. I expect maybe a bias to change in the coming days, and hopefully we come up and retest it, and that's it. Sayonara. So that's the hope. We put in swing failure pattern. We got this one right here, and I'm hoping that this is the one right here, that we come up to here, and then we get rejected at this fair value gap. I think this is an H8 fair value gap. And this is an H12 right here, all the way up to here. The H12 I expect to fill, but this H8 I can tell it's gonna reject us as for resistance. But let's go ahead and just update this. So this we can get rid of this. We can get rid of this. It's more clear that the H12 supply is better, or fair value gap is better, and we're more likely to fill if possible. It looks like maybe it would have to be, I don't know, near the end of the week or something. Or I don't know, maybe we get to here. But yeah, that's ideal if we come back. I would love to get back up here and short again. I don't know if it's going to be as smooth as it was today, but man, it was smooth. I mean, the whole day, it just, there was a couple trades that the bot took once it broke out of the range that it just didn't do well because it hit my stop, and I just decided to turn on the short too early instead of waiting for a pullback into the 3 minute trail, which is what I'm going to do next time. Is look for the 3 minute trail. Are we touching it or near it? If yes, you have permission to turn on the short side of the bot at one at a time, not two at a time. Because I do two. I think I do two regular contracts per entry. But yeah, I was really aggressive and wanted to stack up my position, and I liked the idea of having a tight stop at the time, even though technically when you're moving so much, you kind of want to have a more slack on your stop for the positions that are lower. But that was pretty much it. And we're hoping for more great positions to the downside. I mean, we got a whiles to go. I mean, even if we only went 15% to the downside, we only moved about 2%. So lots of room to go. Looking forward to the short, wherever that is. And according to the H12, it looks like it's somewhere possibly here. So technically, maybe, I don't know. We'll see if we keep on just dropping. It's possible we just keep on dropping until we get here. This is kind of where the naked H4 breaker is. Specifically, let's see. This one. There's the naked H4 breaker right here. So it's possible we just keep dropping. I'm kind of thinking we don't. I'm not 100% sure, to be honest. I'm really wanting to go back up if possible, but it just might not happen. It might just continue dropping. So, I mean, we'll see what happens. As far as like Covey, I think, is doing good. Probably getting up there and rank again. So the rank hasn't been updated for today's performance. But as far as the performance for today, it's done really good. 10% on the gain, 41% total gain. So we're doing good. We're doing so good that I'm able to have a big size on my position sizing, and it's not similar to Mark. Mark, he's able to have like a huge position size. I think he's got like his performance is like 2.9 or something. I'm 1.29, so I'm like half of his. If he did 40%, it's equal to my 80%. So it's a big deal. And yeah, so this is kind of the lineup. I'm just praying that um, what's his name, Jim Cramer was talking bearishly about crypto, and here I am. I have all this crypto short, and I'm afraid that it's gonna go bullish on crypto, um, and part of me thinks not yet. It might. Just I'm just really hoping it's not until after the bear the liquidation has finished. I'm just praying that once the liquidation is finished, then the risk comes back on, and that's what I want. I'm a little scared to look at some crypto charts. I'm not gonna lie. And that would help me just kind of discern of what to cut and what not. But I think once I see where crypto is just like really strong and resilient, and when the market's going down, crypto's going up, I'll cut it. I'm just not in the mood. I mean, at a glance, if we were to just take a look here, we had an H4 breaker, and do we have any daily breaker? No. Do we have any weekly border block? No. So my expectation is that it would continue to the downside. Now, if that were to act like Japanese yen, where it's just so strong, it just keeps on keeping on, even though it broke down, we're gonna have to change it. But I'm expecting crypto to go down, and we need that to be true. Or else I'm gonna look like a fool. I have to sell my shorts on Ethereum Classic, Matic, Sand, Phantom, and Engine, Atom, and Matic. Real estate short. I think that's 3x short. SRS. Let's take a look. It doesn't say. SRS is 2x short real estate. And then we got SPXS, that's 3x short S&P 500. And then DRIP is 2x short bear oil and gas. And then UVXY, I think it's 2x leverage the VIX. So I expect volatility. I mean, Japanese yen is up. We want to see a weekly breaker on the yen. Right now, we kind of closed above this last weekly close, and we're retesting, and we're expecting it to rise from like a phoenix from the ashes and totally destroy this weekly breaker and cause a whole lot of volatility and risk off, where metals go down, oil goes down, and lumber goes down. It's just something that I really want to hammer home, that hey, this is happening. And then the euro, I don't know what's going on with the euro. It should be going down. So far, it's going down a little bit. But maybe it'll be a problem. We'll see. But gold is exactly playing out how I thought it was. I said I'm not touching gold until it closes the week above this weekly close, and this was the weekly close I was talking about. I have a line there, and gosh, was it darn golly, gosh darn golly, I was right. Like, we did not close the week above. We wicked above, and we did a stop hunt, and swing failure pattern, boom, dropped like a rock. Now we're about to do it again. This is the left shoulder instead of it being this. This is the wick, basically. This is the left shoulder, swing failure pattern, drop like a rock again. So, not saying that that's what's going to happen, but it's leaning that way and it's looking like that way. If it walks and talks like a duck, it maybe is a duck. So, oil going down, metals going down, lumber going down, yen going up, VIX going up. VIX, we got H4 breaker to the upside. Um, let's see, and then the lumber is down, and then oil. Man, it's been a long time that I've been saying this. It's been over a month that I'm like, this is what I see this coming, and it just, this is how long it, like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks. 12 stinking weeks. I've been saying the same thing over and over. This is what's coming. This is what's coming. Oil's looking weak. Oil's looking weak. Boom, finally. It's happening. Finally. Yeah. So we pierced that last week low. So now we got to see where the week closes on oil. And it's going to go down to weekly demand. And this is the closest. It's almost there. But most likely it's going to go to here. Around here. So it's still got a ways to go. So it'd probably equal 30% from where it was. This doesn't measure in percentage. It just does, I think, pips. It's somewhat related. So, right there. And unfortunately, I don't know if that's like 70%. Nope. But that's almost 14,000 pips. So that's that. And then let's look at the Russell. Let's make fun of the people who hopped on the Russell wagon. Okay, probably going to the lows. Don't know if this is where it'll stop. Like, I mean, weekly swing low. It looks like a good point for it to stop. Triple bottom. If we take out this low, it's bad. It could go a little lower. But soft landing, this sounds like a soft landing right here. I mean, it's where weekly demand is. Like right here, this is the demand block on the weekly. The down candle before the upswing. So this is from the wick high to wick low. That candle, demand right here. There's support right there underneath. But yeah, this is looking like this is where it would go. So before I decide to behave differently and not be disciplined with the win and just really review what I did good and then review what I'm doing, what I'm going to do different. That's pretty much the most important part here with this evaluation, because I just now pulled up the trailing drawdown liquidation. I think the trailing drawdown liquidation is 7,000. And for how choppy it is, I mean, you saw it. Like, I had a whole six accounts. One's a sim. 2 of them are halfway to passing the evaluation. I have to get 20K each account to pass the evaluation. And I was like, this is going to be easy. And I got carried away for when I was going to start shorting. Like I even told people I'm not going to short until this happens. Well, I decided to short before it happened. I was said I was going to short only when we have an H4 breaker on the S&P 500, and we all through here we got one here, and it happened to be a false one. It usually takes two. This was the second one, and this was when it was finally at it. But by the time I got here, I pretty much wiped out uh, all the accounts before they pretty much blew. And I got two to reset, and that's the fruits of my labor. So this slow bleed was really difficult to catch any profit. I mean, I got hit $800. I mean, that's nothing compared to what I got here. That was 11,000, basically 11,000. So that was in no way comparable. But yeah, like if I actually was disciplined through all this chop, man, that's a lot of chop. Like this was difficult. Like, but now I kind of have some extra things to look out for. Like for example, wait for two H4 breakers and a swing, a purge of a swing high H12. So there we go. Like that will help me stay disciplined. Like, okay, this is it. Let's put a horizontal line here. Just kind of frame it. But that could have been 6 accounts with 10K each, but I had to be impatient and just having a gambler spirit and heart, and just being a junkie. I had to go and lose so I could feel something, and that's not how it should be. So this is kind of worrying me a little bit because I want it to come back up so I could short it again. If it just keeps on bleeding, it just makes it more difficult to short. So I don't know. I mean, technically, did we get a H5 breaker to the upside? I think I got scared. I just closed the whole position. I mean, it was getting close to the end of the day anyways. No, we haven't had a breaker to the upside. But this could be the beginning. Right here, we just need a break. We're getting close to the Asian session, so I'd say we're pretty close to the bottom. But and then we'll see if the trail flips on the H12. Here it is. There is no trail here, but there's a trail somewhere. There's the trail. It's right here. They would put it right here. This, oh man, it's going to be really weird if it were to come back up into here. And it wouldn't. It would stop here because usually H12 fair value gaps hold, and oh no, and sometimes they fill. Sometimes they fill. I don't know. But it's just hard to imagine. Just I had the timing solutions pulled up. I got both of them. This is the Yahoo, and this is the timing solutions um, database source. And it's just hard to imagine more of a rally. Maybe the rally is this thing back into it. But the thing is, it's just really weird. Like, how does that work? To me, it just means that we should be shorting all throughout here. Let's look at the stock charts. Weekday. Oh, can't be saying my password out loud. So we're not completely bullish, but we might have a bull day. Yeah, bullish day, but maybe like a little bit of a weak bullish day. Ooh, we don't want that one. I want the daily. So we'll check back on it when we have some upswing. Right now, like I think, wonder when 1024. Man, we got overbought big time here. Should have been looking at this. But let's see. Yeah, like I think we're in the final innings. We're gonna be watching the 5 minute market structure break. It looks like we're coming into it again. I mean, this is not the first time today it's come into it. We'll be watching the H1. So this H1 is like the clearest signal. Like if I held on to my position, the remaining two that had trailing for break even, I would wait until the H1 breaker. But it sucks that I can only hold on to my trades for 24 hours. So it's either the 5 minute or the H1 breaker that is the determinant. Now I'm curious to see where this, what happens after today. Where does the H1 breaker go to? Does it like immediately drop like all the way down here, and then a good setup for a breaker to the upside? If so, I might do a little scalping on the way up. Most likely, it's gonna be possibly the brand new accounts, like the four that doesn't have anything on it. I'm gonna renew them tomorrow. But the goal is to have all 6 accounts hit the profit goal of 20K each, and then that would have 6 contracts to be able to go low and slow. Instead of risking 1 to 2% per trade, it would be a quarter of a percent, so less than 1%, 0.25% per trade. And the goal is just to have these accounts forever and just go low and slow on these accounts. Like I only traded around 6 contracts. I think those were 6 regulars of the futures. Let me check. So I did the chart, and then I selected ES. So this has ES, and then this has micros. So in this one is the stocks. So I'm trying to kind of formulate. Maybe that is a mini. That's like 12/22. That's the December contract. So maybe I can't tell if they're regulars. I mean, we can take a look, kind of. So let's go. Oh, let's take a look. They're micro. Oh, those are they are minis. So I've been doing minis, and I think so. I know a mini is half a full contract, and then a micro is a tenth of a full contract, but it's, I don't know, maybe it's a tenth of a mini. But most likely I'm going to have to do minis once I pass the eval. This is the profit goal right there. So really hard, really difficult, but with the right event, like 15% to the downside, you might be in luck. So, and I had a really good deal, Black Friday deal. So, I mean, with 6 contracts, that could go far, and the whole goal is to have a trading system and to just let the trading system ride, and when it wins big. When it loses, we make the loss small as it can be. And of course, we got uh, a risk ladder we're gonna follow. We're gonna try to obey this the most we can to show the discipline that we got. Trading outside high probability trend days. So, for example, Tuesday, Wednesday, Thursday are the high probability trend days. Monday and Friday usually are not trend days. Trading outside high probability times, basically it's the first 3 hours, the hour before, and then the hour it began, and the hour after of the session. And then trading at a smaller time frame. So, when it's small, like a 5 minute, there's a lot of errors that happen. Trading a position size higher than normal, like 1 or 2%. Like 2% is, flirting with gambling, and then exceeding your losses on the day beyond. I think it's when it's like beyond 2% or 1.5%. Yeah, I think 1.5%, because ICT, he says you want, if you take a trade of 1% risk, if you lose that, okay, then you do half of a percent on the next trade, and if you lose that, you're done for the day. That's what he says. So that way you make the losses as small as possible. You diversify your losses, and you maximize the opportunity of a win, absorbing that loss. So, and then the next one should be don't take trades with less than a 2-to-1 risk to reward. So we're going to put that up here. All right. Bam, bam. Don't trades with less than 2-to-1 risk to reward ratio. Looks good to me. All right, so that's pretty much it. Oh, and then another one would be, I guess, pullbacks. Don't. So now it comes up the discussion: do you enter on the breakout or the pullback or the resumption? So those are 3 different points, and I think that should go in the risk ladder, like your entry. So the higher risk entry should be taken less than comparatively to the pullback, maybe. So the pullback has the best risk to reward, because you could you can let the trade breathe. But the resumption has the highest chance of, um, I guess, continuing. So I don't know. I almost want to say it's the pullback. Is So don't uh, trading away from the pullback. You know, maybe that's the last one. We'll call it the pullback zone, and then we gotta somehow make this small. fits. All right. So that's the risk ladder. These are different ways to decrease the risk. And two of them have to do with trading, specifically the trade. And then the rest are more of a context issue, but and more of like something that would get your heart racing, right? Like staying up, just trading all the time, trading every day, and just wanting to chase that high. You know, those deal with more of the heartstrings more than the risk to reward and trading away from the pullback zone. Maybe it does a little bit, but that's pretty much it. Thanks for watching. See you next video.